It is December, and it is time to do a review of the markets in 2020 from a Wyckoff perspective. My name is Bruce Fraser. I'm your host. This is Power Charting. Good news is this: we are going to start part one today. Next time, we're going to do part two with special guest Roman Bogomazov. And Roman and I are going to continue our review of 2020 and look ahead into 2021 also. We'll bring some things up to date today. So this isn't just going to be pure review, but also let's bring some things current so that we can see where we are. This was a slide that was introduced in January of 2020, and we did a Wyckoff method market study with the present position of the market indexes as our subject. We did point and figure count objectives and demonstrated that they were fulfilled on the upside into an important rally peak at the end of 2019. We showed that sentiment had flipped to a very extreme bullish reading, which was essentially bearish. We looked at the monetary backdrop, long-term price structures, and why we were overbought in the upward trend, and that climaxing was occurring, which was also a measure of sentiment in the market. And we were going to watch for a change of character in price, for a range-bound condition, and to build a new cause for a future advance. So let's see how that all turned out. We also, you will recall, looked at this sentiment index of the presidential election year cycle, 116 years of data, only looking at the presidential election years, and we were using this to identify the potential path of the market for 2020. Here you can see that we have a range-bound condition early in the year. Things turned out a little differently than this, and of course, our primary arbiter is always to look at the Wyckoff method for our analysis. But importantly, we saw here in the beginning of the year a peak in the market after a rally in 2019, and then an important reaction occurring into February. Well, in fact, this was pushed back about a month. So let's look at this. We'll come back to it. And you can see here the 2019 rally needs a rest. A new cause is needed, reaccumulation forms. This is what we were looking for. Turned out to be an accumulation, and we'll show you that. Stocks will return to strong hands during a reaccumulation or accumulation, and then the uptrend would resume, which is the red line that we see here. Something akin to that did in fact happen. But as you can see here, as we line up these this seasonality chart to the Dow Jones, or in this case the S&P, is here's our peak that we saw coming in January after a big uptrend. Well, here was our January peak, and here's our February peak. And then the big decline came, which was this period right here, which actually made its lows in March. So it came about a month later. The other thing that happened was this was such an incredible V-bottom low and of significant importance that the uptrend began from there. And of course, we had an epic uptrend, especially in the NASDAQ 100 stocks. Thereafter, went to a new high. And here we can see that in the month of May, June, it showed the market having a seasonal upturn. Well, in fact, at the beginning of June, we had a buying climax, automatic reaction, range-bound condition, set a reaccumulation for another move up. But look at how closely the market's uptrend followed the seasonality here and then accelerated into a September climactic peak right here. So very interesting. And then an important reaction thereafter, which we had here. Again, we're off by a few weeks, call it 2-3 weeks later, this low was put in, but this is some kind of a range bound condition, minor new highs coming in late November and December. Well, that is what we are getting now. And we still have the month of December to go here, or most of it. And so the seasonality really tended to work out here in the second half of the year. But we also had a very important low that showed up in the seasonality chart after an important decline, and that's exactly what we got. Now, we expect a cause to be built. This is actually the low that was made at the end of 2018, early 2019. I just want to show you this because we look for these causes. Look at this V bottom. This looks an awful lot like the 2020 V bottom low, but in fact, it is the end of 2018, early 2019. And you can see that there was an important uptrend. This was the uptrend that formed into the end of 2019. And we had point and figure counts. We ultimately had other counts that were able to go a little higher. I'll show you those here right now. And you can see the Dow Jones Industrial Average making this important low. This is January of 2019. This is the count that we took back then. And we said that it could go 28,300, 29,250 as a potential larger count objective. This is using 5-minute data, ATR scaling, 3-box reversal. And this chart you can see was published on December 13th of 2019. This is another interesting point and figure chart. I want you just to keep these in mind as we go forward. One of the big things I want you to see in this chart, which was actually made back in July of 2019, is that this count here, the green area, this is all the way back to 2016, counted up to the area of the top of this very large range bound condition that has carried on since the beginning of 2018, right up to the end of 2020, actually, when new highs were made. We're slightly above this level now. But notice how this count area contained the advance in the S&P for multiple years. Well, we also have a larger count across here that takes us to 3,800, 3,980. We have a count here, and I'll come back to this likely next week, and we'll talk about this with Roman, but you'll see here that there's a confirming count that goes up to this level. Well, actually, with the subsequent action in 2020, this count could be even larger. And there's a case to be made that this could be a continuation of the very important bull market. Here is an interesting chart that we put up back at the end of 2019 and showed it at the time that this very good rally from the 08-09 lows had carried up from near the bottom of this channel that goes all the way back down to 1942 and carried up. This is the S&P 500 yearly. Well, look what happened. It's rallied up to the top of this channel, touched it at the end of 2019, and we indicated that it was likely that there would be important resistance at the top of this channel before it could keep going, if it could keep going at all. And so here, looking at this chart, let's bring it up to date. And here in 2020, here's the range through November 25th. And this range, you can see, had an outside bar, went down, came back up to the top of the channel again, and here we are slightly above the channel line again of this same chart. And so we're in an interesting place. Can we break away from here and accelerate upwards, or is this going to represent another form of important resistance? Look back at this period in the 50s to 1970. And you can see these yearly ranges where the market basically was able to get up to the top of the channel and then consolidate up there, make minor new progress, and then come back into the channel again, ultimately into the 74 lows, important bear market low. It went down to the bottom of the channel line. So, but look at all the work that had to be done before that could happen. Interesting. We'll keep an eye on this chart, but overbought, top of the channel again. Now, I had showed you these point and figure charts. Well, there's a couple of them from the 2019 year that I showed you at the end of 2019, early 2020. And it was very interesting because look at this count, 29,254, 40 off of this accumulation low, which we just looked at. And then also a reaccumulation count, again, reminding you that this is 2019 and this chart was done on January 2nd of 2020. And this count went to 29,509, 30,177. So here we are with confirming counts here and here that we had a run up to the top of this channel, which also represented the fulfillment of these point and figure counts. And so these point and figure count objectives were nearly confirmed, were complete. The epic 2019 uptrend was overbought and was actually showing signs of climactic behavior. Now at the top of a channel, this is at the end of 2019, beginning of 2020, and the PNF objectives are nearly fulfilled. Well, what happened next? Okay, so this is what happened. This chart actually was from a video that I did for power charting. February 20th is when this chart was made. These are the same counts up here, confirming point and figure counts. And we had now a throw over overbought condition in January, which you can see here, February, which you can see here, and then the ultimate high print for the Dow Jones Industrials, 29,568.52. And look here, 29,509.34. So it just creeped above the minimum objective of this count, point and figure count here, and went above the top count of this accumulation range back at the end of 2018. Overbought, throw over, climactic conditions. Interesting. Well, we'll look at the sentiment here in a minute. Let's bring this chart up to date and look at it through, now this is through November 30th, couple days old, but this is the same trend line. This is called a demand line. This demand line was broken in the COVID March decline substantially, by the way. And here we are rallying up. This epic advance from the March lows takes us back up to the underside of this demand line, where it is now riding along the demand line after a gap, climactic surge, and is slightly above the highs that were made back in February of 2020. So interesting up thrust, throw over of this prior peak. This is an area of resistance, and there is some excitement in the advance in the Dow where there's been sort of a gap up. So this could be a place where the market is going to have to pause potentially, or maybe it has to have a more important correction. At this point, it's hard to tell. We're going to have more thoughts on that with Roman next week, so be sure to come back for that. All right, so let's keep going. We have a lot more to do. And so this is up to date through the end of November. This is just some point and figure work that was done back in one of these earlier slides. So this is February of 2020, and this is a 30-minute point and figure 3-box reversal method using user-defined scaling, which I typically do this based on ATR. So consider this to be ATR scaling. You can see this count here. Well, look what happened. This count went all the way down to the area of 26,900, and that decline was a pretty important decline. very good distributional structure, easy to see, easy to count, on point figure. Okay, so now let's go back and look here. This is 60-minute data. And in fact, we got into the range of 25,300 at the, now, oh, so let me explain this chart. This is the end of 2019. And so this count here actually was taken back in the August, September time period. Let me show you when this is. This is this period right here. So this was the count that we got that took us up to this 29,254 level. And so this count here was a beautiful count that came in the August period, which ultimately gave us a beautiful swing trading count up to the ultimate highs that we had achieved right there at that 29,500 level. Great job. We took a bigger count, a more aggressive count, 31,668. I did not achieve those counts, achieved this area right here, which was our primary count. So now let's go back and look at the January accumulation count. That was the count that preceded the one we just looked at, and this is the 29,254. So go ahead and take a screen capture of that if you care to study it, but look at how this count across this 22,600 area is the count line. Notice how it counts all the way up to 29,254. So point and figure does a great job again. Now, here is the fear and greed index that occurred back at the beginning of 2019. The very low reading 3 was extreme fear at the beginning of 2019. By the end of 2019, that fear and greed, this is the CNN fear and greed index, reached 91. So extreme greed. So at the beginning of the year, extreme fear. At the end of the year, 2019, extreme greed. And of course, this is right into the January, February peaks in the market, which ultimately put us back into another decline to extreme fear again. I'll show you a history here in a minute. This ultimately went to 94, which is out of 100. So a very extreme reading. So here is this chart as of this area. Let me show you where we took these readings. This is the end of 2018 here, extreme fear, run up, extreme greed into the end of 2019. And then this is the COVID decline, which went all the way down to single digits again, extremely low reading. Well, look at where we are again. Here we are at the end of the year. So these two readings were at the end of the prior years. This reading came in March. Here we are in December again. We have a reading of 92. So we are back to the extreme greed reading zone again, which shows that there's a tremendous amount of bullish sentiment. Bullish sentiment as a contrary indicator tends to say that the market has gone up too much and needs a rest. And so here is a chart of the S&P 500 here through December 2nd. And here is the fear and greed index plotted over these periods from 2018 to the present. So you can see extreme fear, extreme greed right here. And you can go to the CNN fear and greed page and see how this is constructed. It's, I think, a very useful tool. So extremely pessimistic here at the end of 2018, as we just discussed, important low. Here is the January, February peaks in 2020, and then here is the peak that was made in the fear and greed index, which is a very high reading, nearly 100. Actually, I think we said 94. Okay, so then COVID low, single digit readings again, and now look at where we are. We're back up into the 90s again as we push up above this prior peak right here, which could be an upthrusting action. If it is, it doesn't mean, and I want to make a really clear point here, that we have to have a decline like we had in March. It doesn't mean we have to have a decline like we did in October to December of 2018. We could have something that is much gentler or even pulls back slightly over a longer period of time. It's hard to say. Maybe we don't get a pullback at all. But let's go now. Let's shift gears, look at some other sentiment. And this is the put call ratio. And we can see at the end of 2019 that the put call ratio was at a reading that showed extreme call buying, contrary indicator that tends to be bearish. Now, it can take a long time for sentiment to finally work its way out. You can see here that these readings were historically relatively low, meaning a lot of call buying on this index as the market was working its way higher. This is the 2019 rally. So the 2020 rally, you can see that as the market rallied, this is January 2020, this is the end of 2019. So you can see here that there was extreme call buying into the end of 2019. And we can see from that there was too much bullishness at that time. Very bullish, contrary indicator, be cautious. Okay, so let's bring this up to the present. And so you can see here, this is a chart that is up through December 1st of this year. So we're just bringing this data to the present. I like to look at the 10-day moving average of the put call ratio. This was a historically extreme reading. This is what we just looked at. We looked at the December data in 2019, and into February, there was a tremendous amount of call buying. It was historic in terms of volume and the ratio. Here you can see from June onward that, and this also represents a period when the market went into a range bound state. So even with this extreme call buying, the market tended to go sideways in a sideways trading range during that period. Well, here we are, 10-day average, and we are about the lowest reading that we've had since September and throughout the history of this indicator here that we can see on the screen. But actually, historically, these are extreme ratios. So with this, let's keep this in mind because it supports the fear and greed indicator that we just looked at, suggesting that sentiment is extremely bullish at this time. Here's a look at gold futures contract. These are monthly bars. It's a big history. Go back and look at this blog that was written, Prospecting for a Low in Gold, August of 2018. That blog was written right here. We made the case for an important last point of support low, that gold should rally from that level and complete a very large accumulation base. Well, at December 31st, 2019, we updated this chart. You can see that it had jumped out above the resistance area and had backed up. And we had made the case for higher prices in gold thereafter, that this was a backup after an important phase C, phase D rally in a Wyckoffian terms. So just screen capture this chart. I will show you the update. So here is through December 1st. Here's what in fact happened. You can see that gold had an important rally. We had said at the time, you can see resistance up here. But we said at the time, well, or at a in a later video, that resistance would be at the area of the buying climax high from 2011. And in fact, it went right up, slightly through over the buying climax high, and has been correcting since. So this correction has gone down to this level, which is the 2012 high. So keep an eye on that. Let's see if this is another important backup that will be a pause before a resumption of a rally phase, which, this could go on for a period of time. So we're going to watch this very closely. Now, this chart is this is June of 2020. This is a chart that we've been using. We've talked a lot about broadening formations and what could happen with broadening formations, but here's the S&P, and this trend line right here goes back to 2016. You can see the two adjacent lows that we drew this demand line on here, and it held it very well until we got into 2018. There was a sharp break in 2018. Thereafter, the market rallied up but couldn't stay above this demand line. Well, since at the end of 2019, early 2020, it overthrew the demand line temporarily and then reversed back down and had the COVID decline into March, which was substantial. Took out this low here and also further confirmed the broadening formation structure that we had. And we've done a lot of work on that. I will try to get to that possibly in our next video. But here is this chart brought up to date. So here is the throwover at the end of 2019, early 2020, January peak, February peak, very sharp break, new low here, and then this epic rally. Well, look what's happened. We are back up to this important demand line as we were at the beginning of 2020. This demand line also is being met with an extreme of sentiment, bullish sentiment after a very long uptrending move as we had in 2019. So these actually 2019 and 2020 do have a family resemblance. Sentiment wise, sentiment coming at the end of the year, the market pushing up right into the end of the year as the presidential election year seasonality had suggested. Here we are pushing up again. And so we are looking for whether or not we can sustain this trend line or whether there's going to be an attempt to come back into this range bound state. So there's a couple of ways you can work off extreme sentiment that don't involve a decline like we had early in 2020. And we will make a case for that next week. So here, this is just, let you screen capture this. This is a point and figure chart that we did back that showed the decline potential into the COVID lows. It was a beautiful count objective that worked really well. Same with the Dow Jones Industrial Average, and you can screen capture that, but those really helped us to pick the low area for the market. So here is this broadening formation. I'll let you look at this. We actually published this in the Dow right at the shakeout low, which was also where those point figure counts you just looked at were. And then this is the rally that came after that. And so you can see this is really the same chart. But, and I will just show you all of these points. So with that, it's time to go. And we will see you next time with Roman here. And thank you for your time today.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.